Tapering is expected to be announced, and my next guest expects Jay Powell to strike a delicate balance he's calling the taper two-step. For more, let's bring in Stephen Stanley. He's chief economist at Amherst Pierpont Securities. Great to have you, Stephen. What do you mean by that?
Hey, Kelly. So I think, the Fed wants to separate tapering from rate hikes. And the way to do that, I think, is, as you announced taper, to reemphasize that just because we're starting to taper doesn't necessarily put us on a set time clock toward tightening. And so they'll try to create that distinction between the two steps.
Now, there's always the fun of saying to you, what do you think is going to happen? And then what do you want to happen? Do you think they're behind the curve here? Would you like to see them even talk about raising rates sooner here?
I do think they're behind the curve, and I think they're going to end up having to move faster than what they themselves seem to believe right now. But they're going to want to be pretty judicious and move in a step-by-step fashion. It's going to take a while to unwind. The tapering process itself is probably got to be 6 to 8 months, and then, rate hikes after that. So it's going to be a while before they start to hike rates. And in the meantime, the economy continues to roll along, and wage and price pressures appear to be building.
That's why I think it's interesting to focus on kind of the negative 1% real rate that we're seeing. If you just kind of go off 10-year tips, what does that economically tell you? If we ignore everything else going on in the economy, stimulus checks and, tapering and supply chain and prices and core CPI rate, what does the simple fact that we are at a negative 1% real rate tell you is going on here?
That the Fed is very, very easy, and there's a tremendous amount of liquidity in the system. And I think that's the thing that is being overlooked a little bit right now. Everybody's talking about the supply chain issues, but there's also extraordinarily strong demand, which is being driven not only by the fiscal steps that you mentioned, but also by very easy monetary policy. And so, the economy is very hot right now, and I think it's not only because supply is constrained, but also because demand is very strong.
And maybe a good illustration of that is the fact that nominal GDP grew 8% last quarter. It was only 2% real, but I believe that leaves people with the impression that the economy is barely expanding, when in fact that's double the pace that we saw for the entire previous expansion. What would happen if the Fed raised rates by a point, let's say, just to be ridiculous? What would happen to the markets and the economy, do you think?
Well, look, that would be a shocker for the markets. And so there'd be a big adjustment in the financial markets. But I think just purely from an economic standpoint, setting aside those financial market effects, 1% funds rate would still be stimulative. It would just be less stimulative than before. So, just because they're moving in the direction of normalizing monetary policy doesn't mean that policy immediately turns from being very easy to tight.
Well, and again, I know I'm asking you a lot of sort of to speculate on what could or should happen here, but I do want to remind people that you basically think this will be the meeting that he really tries to de-link the taper from tightening.
I think that for the next month or two, at least, that's probably going to be the dominant communications theme that we get from the Fed. Is they're going to be trying to assuage any fears that they're about to, just go willy-nilly to the tight side. I think beyond that, probably as we get to early 2022, if the inflation numbers continue to behave as they have over the last couple of months, then that's kind of going to overtake what the Fed would like to do, which is to be calm and soothing and step by step. And I think they're going to have to get themselves in a little bit of a hurry.
Yeah, maybe soothing would sound a little different if that were the case. Absolutely. Stephen, thanks so much. It's great to have you. We appreciate it.
My pleasure.
Stephen Stanley.